Hey everyone, welcome back to Corporate Decoder. Today, T1 Energy Incorporated just filed a current report on Form 8. Kay and I am seeing a major change in the company's structure that could really impact shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just announced they are significantly increasing the number of shares they are allowed to issue, and this comes right after their annual meeting where stockholders voted on it. T1 Energy Incorporated, also known by its ticker symbol TE, held its annual meeting on the 17th of June 2026. It was an online meeting, and the company shared the results of several important votes. One of the main items was the election of directors to serve for a year. The company listed 8 individuals for these positions, including Daniel Barcelo, W. Richard, Anderson, Todd Jason, Cantor, David J. Manners, Peter Matrai, Daniel Artemis, Stangart, Jessica Worthstrine, and Robert Hammond all. Of them received a significant number of votes in favour, indicating shareholder confidence in the current leadership team. For example, Daniel Barcelo received over 169 million votes for his re-election. Another key vote was the ratification of KPMG LLP as the company's independent public accounting firm for 2026. The results here were overwhelmingly positive, with over 205 million votes for ratification, which is pretty standard for this type of proposal. Then there was an advisory vote on the compensation of the company's top executives. This vote is often called a say on pay vote, while it is non binding. It gives shareholders a voice in how much executives are paid. In this case, over 141 million votes were cast in favor of the compensation plan, which suggests that most shareholders were comfortable with the executive pay. Now, here is where things get really interesting. The company also proposed increasing the number of authorized shares of common stock. This means they want permission to issue way more shares than they currently are. Allowed the plan was to double the authorized shares from 500 million to a whopping 1 billion shares. This is a pretty significant move, and it was approved by the stockholders with over 201 million votes in favor. This vote paved the way for a certificate of amendment to their charter to be filed. This amendment officially allows the company to have up to 1 billion shares of common stock, and it's set to become effective on the 18th of June 2026. The company's board of directors had already given its approval before this shareholder vote. Why is this so important? Well, issuing more shares can be a double-edged sword. On one hand, it gives the company flexibility to raise capital through stock offerings, which can be crucial for growth acquisitions, or paying off debt. The news from the 17th of June mentioned a $32 million acquisition of Core Power, which this share increase could help finance. On the other hand, if the company issues a lot more shares without a corresponding increase in its value, it can dilute the ownership stake of existing shareholders. Imagine if you own 100 shares and the company doubles its total shares outstanding. Your 100 shares now represent half the ownership they did before. This means your percentage of future profits and voting power is reduced. This move comes at an interesting time. T1 Energy Inc. has seen some volatility in its stock price recently, with headlines indicating analyst interest and even a surge driven by Chinese investors disposing of a stake. The current stock price for TE is around 0.79, and the warrants TWT are trading at a similar level. Given this context, doubling the authorized shares suggests the company is planning for future capital needs, perhaps related to ongoing growth initiatives or the recent acquisition. The actual certificate of amendment, dated the 17th of June 2026, is included as an exhibit to this filing. This is the official document that legally changes the company's charter to reflect the increased share authorization. The report is signed by Evan Calio, the Chief Financial Officer, which makes sense as this type of financial structuring is right in his department. So what does this all mean for T1 Energy Inc. and its investors? It means the company is positioning itself for potential future growth and funding needs by having more shares readily available. The key will be how they utilize these newly available shares. If they use them wisely for accretive acquisitions or profitable expansion, it could be very beneficial. If they end up diluting shareholders heavily without significant returns, the stock price could suffer. Historically, companies that massively increase authorized shares without clear immediate use cases can face headwinds. The risk I am watching is whether this share increase is a proactive move for growth or a reactive measure to potential financial strain. It is essential to keep an eye on their future filings to see how they plan to deploy these shares, and if the company can continue its upward trajectory that some recent headlines suggest. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this helpful, give it a thumbs up, subscribe, and join our Discord community linked below.